Welcome back to your CPA School. Your CPA School always focuses on concepts. Why? Because when concepts are clear, learning becomes easier and confidence follows naturally. We are your trusted partner for CPA success. Here we build your confidence by presenting the concept in an easy and understandable manner. Let's grow together. We have designed our master series to solve the problem of understanding the concepts. Our master series covers all units and modules. Today I am going to present some important concepts from part 1, module 1. The topic of the today's session, the gateway concept of accounting. At the end of the session, you will be able to explain how every transaction flows through four logical gates. Four logical gates combinedly called four gates approach. Four gates. Gate 1, classification. Gate 2, measurement. Gate 3, reporting. Gate 4, tax impact. If you understand these four gates, part becomes structured, not overwhelming. This is your transaction accounting roadmap. Never skip the order. Gate 1, classification. Classification of business activities. There are two types, core activities and peripheral activities. Core activities comes from ordinary course of business. Customer, sales, services, these are the words that represent core activities. Peripheral activities, incidental activities, not regular activities. Sale, dispose, abandon, exchange, these are the words that represent peripheral activities. Remember, core activities are the ordinary course of business, means the business organization is established for these activities. R is a classification exam. It is not calculation exam. Even perfect math on 0 points if transaction is misclassified. The next gate depend on the first gate. The measurement is always based on the classification. Measurement model depends on classification. Wrong gate 1 equal to wrong gate 2. Always confirm your classification before calculating. Measurement answer at what amount, full amount or net amount. For core activities, we use gross concept. Why? Because it measures performance or a scale of operation or volume. So what action should we take? We need to report full revenues or expenses. For peripheral activities, get concept is used. Why? Because it measures efficiency. What action should we take? You need to report only gains and losses. You know, gains and losses are the difference between proceeds and carrying amount, right? Get 3 asks. Where does it go? Means presentation. Now we move to the presentation. Where does it go? Presentation answer. Is it balance sheet, income statement, OCI, disclosure only? We are dealing with core activities and peripheral activities, right? Both core activities and peripheral activities, both. Here you see income statement. Income statement means both activities should be reported on income statement. And here you see income from continuing operation. Income from continuing operation means similar treatment. Means these activities are part of continuing operation. So both should be reported on income statement and they are part of continuing operation. Many CPA traps happen here. The transaction may be classified correctly, measured correctly, but presented in the wrong section, and that cost point. Gate 4 asks about tax effect. Finally, tax impact. Tax is always the last gate, right? Never start with tax. Tax is a consequence, not the starting point. For core activities, pre-tax amount. For peripheral activities, pre-tax amount. Both are similar treatment. Why? Because both are part of continuing operation. For continuing operation item, there is a separate line item for tax purpose. The gateway concept of accounting is very important for entering financial transaction of business into an accounting system. Accounting has its own language and you should be able to converse with it. The gateway concept table. Remember, every transaction must pass through all four gates in order. No shortcuts, no jumping. So the table, if you look at the table, it shows gate 1, gate 2, gate 3, gate 4 and more. So gate 1 deals with the classification we already know. Core activities, peripheral activities. Measurement, gross concept, net concept. Focus, measurement, focus. What is the objective of the measurement? Performance. What is the objective of peripheral activities measurement? Efficiency. Trigger what? Customer, sales, service. For peripheral activities, sales, dispose, abandon, exchange. You see, there is a one difference. Sales on core activities and sell on peripheral activities spending are different. What action should we take? Report full revenues and expenses for core activities. Report only gains and losses for peripheral activities. Where to report? Get 3 deals with where to report. Means presentation on the financial statement, income statement. Tax impact. Get 4 deals with tax impact. We know pre-tax amount. Pre-tax amount means no tax deduction. Income classification, income from continuing operation, income because both are part of continuing. Now we will focus on examiner's logic. The examiner does not test memorization. The examiner tests reasoning. They ask, did the candidate classify correctly? Did they apply the right measurement model? Did they present it properly? Did they understand tax consequences? If you follow the four gates, you align with examiner logic. Examiner logic is classification before calculation. So examiner focus where? Classification, not the calculation, right? The examiner silently asks a specific sequence of questions. For every event, you must adopt this linear thinking process. And we have already learned four-gate approach. Here is also four-gate. So if you once you understand, so it will be easier for you to handle with the examiner's question. So type means identity gate, core versus peripheral activities, whether gross concept or net measurement concept. That is here. Report means either on the net income or OCI means other comprehensive income. Four, tax consequences. Gross means pre-tax income versus net of tax. If you fail at step one, means you fail to identify the transactions correctly or correct classification, the math at step two is irrelevant. In measurement, that case irrelevant. Now we will discuss exam trap. Here is the common draft. Net concept and net of tax. The question gives you number. Student rush to calculate, but the real test was classification. This is why 99% make mistake. Slow down, identify the get fast, then proceed. So one of the most common errors is assuming all gains and losses are reported net of tax. This is wrong because net of tax and there is a gain and loss. Gain and loss always use the net concept measurement. This is the measurement. Second get right. Net concept means pre-tax amount. Net of tax means after deducting the tax. So do not confuse net concept with net of tax. Be careful. In this section, we will test our knowledge. So this is the machinery sale. This is a question over here, scenario details. Company sells. Look at this spelling, SELL. Machinery for 120,000. And what is the carrying amount? 100,000. What is the question? This is called call of the question. How is this reported? So there is a four answer A, B, C, D. Net concept, gross concept, net concept. Of course, gross concept is not because this comes from the peripheral activities. So net concept, there are two net concepts and gain. And it is not discontinued over there. It is a part of the continuous. So A is the correct answer, right? Do not confuse net concept with net of tax. Net concept means this is net concept. Selling price minus carrying amount. The net profit is 20,000. This is called net concept, but it is of course reported pre-tax amount. Means full 20,000 you should report. Understand? Learning is a never-ending process, right? At US CPA School, we believe learning never ends. Stay with us. Thank you for learning with US CPA School. If this school helped you think differently about farm, like the video, share it with a CPA candidate, and subscribe for the next module in the Farm Master series. Your CPA journey deserves clarity, not confusion. See you in the next lesson on foreign currency life cycle.